Hi and welcome to the Market Alert for Monday the 28th of February 2022. Last day of February. Incredible, isn't it? Where is this year going? Anyway, last week, Friday's news headline before we went into the weekend. War news is good news. Stock end historic week higher. Yeah, incredible, isn't it? We have Russia invading the Ukraine and we had a bit of a sell-off, but the market actually ended the week higher than it started on Monday. Incredible. That's all I can say on that. There are no words apart from manipulation. One word, manipulation. We've got Pazar warns of another Lehman weekend as Russia sanctions may trigger central bank liquidity. No difference between Lehman unable to pay back money funds and banks unable to receive and make payments because they are out of SWIFT. Yeah. That was another sanction over the weekend, wasn't it? The Russians can't use the SWIFT system anymore. So the last time the ruble crashed like this, long-term capital collapsed. That was 1998. That was the first one that Greenspan actually bailed out. A fascinating story. Have a look on the internet, on YouTube, if you want to know more about that. It was the first bank that was bailed out, and Barclays Bank received 140 million pounds from the Fed to keep it liquid because they were part of or had invested in the long-term capital management fund when it went pear-shaped with the tiger economies going bad in 1998. Ruble is trading at a cross rate of 117 US, down from 83 USD on Friday. And speaking of the ruble, well, what a surprise. Russians are now queuing to get their money out of the banks. Good luck with that one, because you can't even get the money out of a UK bank without giving notice and a reason of why you're taking the money out, even though it's yours. Well, it's not yours, actually, because under the Banking Act, it is no longer your money when you actually deposit it with the banks. You are just a creditor to the bank under the Banking Act, which is why they have the bail-ins legislation that was brought in 2010 and building societies in 2013, meaning that the bank can take your money if you think it's your money, but it's theirs once you deposit it, and then issue or exchange the cash for devalued shares, as they did in Cyprus in 2011. Don't think it can happen because they've already tried it. Happened in Cyprus in 2011. And Europe. EU sanctions on Russia equals suicide by cop. Absolutely. Europe is incredibly vulnerable here to any form of supply-demand shocks as their financial system teeters on the edge of the abyss. Yeah, good luck playing this one against Russia. News this week, not that it really matters, but we do have one important news item. We've got the ADP on Wednesday. If we have the ADP, then we have the non-farm payrolls on Friday, which we can see there. Also, Powell's testifying this week as well. He's testifying for 2 days, Wednesday and Thursday, and there's a few economic numbers in between, but to be honest with you, it's all going to be dominated by now. Putin's talking about putting his nuke operation on standby, and fingers crossed it's just rhetoric. Meanwhile, in metals, you can see that the gold-silver ratio is going back up, 78. That means that silver must be down. Yeah, if you want to know more about silver, what happened on Thursday, I did a video yesterday on Sunday and brought you up to speed on what's going on and a bit more detail on the 1 billion ounces of paper silver that were sold into the market to hammer it to the downside. Overnight, you will see what happened as well with obviously the threat of the SWIFT system being removed by Russia. But you'll find these in the live trading examples. Right, let's get on and have a look at the markets. Let's start off with the Dow. And overnight, you can see that, well, you can't see that the market's gapped. So let me go to the 30-minute chart there, and you'll see that the Dow has gapped down. How much is it gapped down? Let's just have a quick look here, down to the open. Down 550 points ballpark there for the Dow. It's traded up, traded down, and is trying to get up to the DP level there at the moment, which is not looking good. But don't be surprised if they try and run the markets to the upside. They've got to try and keep this illusion alive now, because it's the only show that they've got to say that they've got control over what Putin's doing. And it's no big deal. The markets are still going up. So let's see how far up they can go on the open, if they do go up on the open of the futures market. So back to the daily, we can see we've gapped down to the 38% retracement, drawn from here back to here, and we've got all of these others on the downside as well. On the upside, we've got the 62% retracement and Friday's high to take out. We're trading above the 5-bar moving average at the moment, but like I say, we've got to see what is happening at the futures are just opening. My internet wasn't working earlier on this morning, so I'm a bit late this morning. So obviously the DAX futures are opening higher at the moment, and the Dow's trying to come back to that DP as we look at the 5-minute chart. Let's move on to the DAX. Also gapping lower as well. Again, let's start off with the 30-minute chart so you can see this. The DAX actually gapped from the close there, which is the high, down to... we had this gap here, and then the market... Well, actually, that's the one we want, isn't it? We want the gap, not the low. 425 points. So that means that the DAX from Friday's high down to this low has already dropped 732 points. I'm not going to be surprised if the spread betting companies don't start to widen the spreads this week, because this volatility is quite something. Certainly today, with that sort of a gap and then moving lower for the DAX. Let me just have a look what we've got going on here. We've got this high to here. We were oversold here, and obviously the market's got the crossover. We haven't got much in the way of volume, but we did trade to the low. How many times have I mentioned the low? That it's very important that the market gets back above this, and that's precisely what we're seeing at the moment in the 30-minute chart as the futures open, and we're seeing the market trade up to the 62, the S1. The DP, of course, is the important level, but it's got the 200 MA in between, and where the selling came in the early hours of this morning at, let's have a quick look, at 1 a.m. In a smaller time frame, let's have a look at the 5-minute. You can see how this is moving to the upside. No surprise, is there? Like I say, you've got to keep the illusion alive that Russia is having no impact on the economy or the markets, which we know is complete and utter BS. It's just a matter of time. So back to the daily chart, we can see what we've got here. We've traded down to 78% retracement, and the market moving off this morning. That 78% retracement, of course, ties in beautifully when we look at the 30-minute chart with Friday's low. It's a given that we could get a trade off this sort of movement back to the upside. We are slightly overbought at the moment. Keep an eye on these levels in the 30-minute as it attempts to move higher. How far it goes, who knows? It's the cash market coming in at 8 a.m. is going to be key, because those holding shares might start to be thinking, do you know what, it's time to get out of this before it actually falls out of bed. So again, maybe a controlled demolition from 8, or again, keep the illusion alive and try and bring the markets back to keep calmness, because once the selling does start in earnest, it's going to be a spectacular, as I've always said. Often been asked the question, so how does this end then, Keith? And the answer is spectacularly. That's the only answer. That's how it ends. Let's have a look at the currencies. Also gapping down, of course. Volatility being generated with the SWIFT sanctions. Again, also gap down hugely in the JPY. Go back to the high of Friday, down to here. And we're down 152 points there. The market again doing the bounce back to the low. Like I say, the low is always a very important area, as the high is as well. And having these on the chart is absolutely fantastic. There are no other pivot points or software that has the high and the low from the previous day, unless you actually program it in. It's invaluable, as you can see in the 30-minute. Yen we've got buying at this level, we've got the crossover, we're oversold, and then we start switching on the parabolic to the upside. In the pound, similar situation where the market has gapped lower, and this was down to the 62% retracement. If I just draw that in for you, we get rid of this so we've got a bit more screen so that you can see it. So from here up to here, we got 78 there. So no, it was sort of gap below the 62 in between there. But again, a gap down like this, the market's going to be moved back to the upside. If I look at the 30-minute, you'll see it exactly that. And they had to get back to the low, didn't they? First, we traded through the low, then we've pulled back, and that looks about 50% retracement. And it's bang on 62, the golden ratio there, and the crossover and the oversold, and then we've been moving to the upside. We're now stuck on the upside at around 78, 89 there, 89. There you go. You get used to seeing this after a while. You can, by having let me just delete these. By having these lines on the charts, you can work out just visually where the market is trading back to. You don't necessarily need the fibs. It comes with a bit of practice, of course, but again, you can see that, can't you, on the chart. Quick look at the metals so we can all get on with trading. Let's find those. Yeah, I mean, here we go. So silver gapped higher and has been selling off ever since, and that is because Friday is the end of the March contract, the futures contract, and of course they slammed it on Thursday. 1 billion ounces of silver. Like I say, in the trading examples on the website, I have already added in I can find it, the silver. Well, if it's not there, check back later this morning, and it should be added in, along with two other trades from Friday as well on the DAX. But so what's happened has come to light. There's only 10% of the futures contracts that have been up for delivery as well. It's normally 90%. Something odd is going on in the silver market. We'll see later on tonight, but most of the delivery contracts, or the 10%, went to JP Morgan. What a surprise. So why is the market, or the silver market and the gold market, lower? Like I say, manipulation of the first order. This should be through $50 quite easily now, but it's not. 30-minute chart, you can see the market gapped up, and they've brought it down to Friday's close, and the DP at the moment, we need this to continue to move to the upside, take out the high of Friday and get back to where it traded this morning. But once the expiration is over today for the silver contracts, the futures, there may be a chance that they could move the market back to the upside. But in the daily, incredible. We need to stay above the 200 MA as well, which we managed to close above on Friday. And in the dollar, moving to the upside, no surprise there, but not of any great shakes considering the devaluation of the ruble, and crude oil obviously up because of the protestations of Putin talking about putting his staff on nuclear alert. Which obviously, well, fingers crossed, it's just rhetoric on his part. And gold, which I didn't look at, also moved, gapped higher, but is now being also hammered to the downside as well, which you can see. How much is this down? Let's have a quick look. Off the high, back down to here this morning, down $165 though. Okay, that will do it for this one. Let's get on, have a look at the markets and see if we can get a few quid out of them today. So with that, as ever, thanks for watching. See you in the next.